Welcome to the Standard Deviations podcast, presented by Orion Advisor Solutions and hosted by Dr. Daniel Crosby, Orion's Chief Behavioral Officer and New York Times best-selling author. Each week, Dr. Crosby interviews a fascinating new guest on a range of compelling topics, from literature to psychology to financial wellness. To learn more about Dr. Crosby's behavioral finance work at Orion, visit www.orion.com.
Hey everyone, Dr. Daniel Crosby here with some exciting news. Ascent 2025 is just around the corner. This year's theme, All In, perfectly aligns with the deep dive we'll take into how behavioral finance can elevate your business and strengthen client relationships. Plus, don't miss the pre-conference Orion Advisor Academy, where you can earn multiple hours of CE credit in one place. I'm excited to meet you all, lead the in-depth BFI sessions you love, and explore the latest tools and strategies to help you and your clients go all in on achieving their financial goals. Register now at orion.com/ascent, and let's go all in together. Hello and welcome to the Standard Deviations podcast. I'm your host, Dr. Daniel Crosby, and today we are joined by an industry legend and a transformative leader in the world of financial services, Joe Duran. Joe's best known as one of the founders of United Capital, a pioneering wealth management firm that redefined how financial planning could integrate life with financial goals. Under his leadership, UC grew to manage nearly $25 billion in assets before a landmark acquisition by Goldman Sachs in 2019, where he subsequently led Goldman Sachs' personal financial management until 2023. His career has been marked by innovative thinking and a deep commitment to behavioral finance and client-centric approaches. And that journey continues with his new venture, Rise Growth Partners, launched this year. This firm is set to take minority stakes in RIAs, helping mid-sized firms scale their operations while staying true to their core values. Joe, it's an honor. Welcome to the show.
It's so great to be here. Thank you for having me.
You are very, very welcome. So I am, of course, most interested and most familiar with your work and your legacy in being what I would call a very early advocate of, we'll call it human first advice. What was the insight that made you sit up and listen and start applying behavioral finance in practical ways when much of the industry was still focused elsewhere?
Well, I built the first business, which eventually became AssetMark. It's called Centurion Capital. We sold that to GE. It was it was one of the first TAMPs in the country. And through that voyage, after I sold it, I left GE, and I would say I felt always dissatisfied that I was only talking about money with people and investing returns. And I found it just not very rewarding personally, and couldn't quite put my finger on why. And then I went to grad school, happened to go to Berkeley, home of behavioral economics, and at the same time was writing my second book and interviewed 100 entrepreneurs who built and sold companies. I promise these two stories will interlock. And it was about how you build a great company. It was called Start It, Sell It, Make a Mint. And as I'm interviewing all of these very successful entrepreneurs of all races and all countries, I would ask them the question, what did it feel like when you sold your business? And 100% would say, if they were American dream, it was the ultimate goal, blah, blah, blah. And I was 34 at the time. We just sold the business to GE. And I should have felt happy, but I didn't. And I said to these people, well, I don't feel that way at all. And the most remarkable thing, 100% of those people said, me either. But how do I tell people that I accomplished this incredible success and I'm miserable? And they used words like it was like a death in the family. I lost my entire identity. I made sacrifices and a big rush that I would never make again. I lost my family. I lost my friendships. I lost my health to get to a certain number. And then they got there, and everything afterwards savors of anticlimax, to quote Scott Fitzgerald in The Great Gatsby, And I was 34 at the time, feeling exactly those feelings for two reasons. One, I had assumed, having grown up with nothing, that getting to a certain dollar amount would give me a sense of peace and security, which didn't transpire when I got there. And second, I realized that in building the business, I was really not enjoying the voyage because I was so focused on the outcome. And at the same time, I'm at Berkeley and they're talking about behavioral economics. And I'm like, God, this is exactly the gap that we're trying to solve. Money as a mental and intellectual exercise, but in fact, it's an emotional exercise. And while I'm not a therapist, I thought, can I build tools that would articulate what people care about? Because money's just fuel. It's the realization I had is money is nothing more than fuel in a tank. And just like you would not choose to go on vacation to a gas station, that's what you're doing when you say, I just need to get to $10 million or $5 million or $50 million, whatever the number is. And you realize that's not the thing. The thing is what you're doing it for. It's the ultimate vacation that you're going to. And so I just realized, I think we're answering the wrong question. I think the whole wealth industry is answering the wrong question. And the question we're solving for, if you're in the wealth business, is how do I maximize your return on your investments? That's not what clients want. They want to maximize their life. So when I created United Capital, I had this simple idea. I want to build a national firm that answers a different question than anyone else, which is, how do I help you narrow the gap between the life you want and the one you're leading? Because ultimately, that is where all of life rests. The closer you are to the ideal version of yourself, the happier you're going to be. So I think today we're going to cover a lot of ground, but at its core, the great wealth advisors helping people live the best version of themselves. And that means touching things more than their wallet. It's actually thinking of money as fuel, and that your goal as a great advisor is to understand where people want to go, not the amount of fuel they got to get there. Because life's going to be filled with sacrifices. What is certain is there will be suffering, there will be sacrifice. And so how do I help you make the right ones so that you get to as close as you can to the life you envisioned you would have?
Okay, I am going to be using that gas station analogy on the regular now. I love that. No one would take a vacation to a gas station. That's what you're doing when you're focused on a number to the exclusion of the life that it funds. Now, so I have to know, at this point in the game, largely because of your pioneering work, I think this return on life concept is one that has a lot of traction. But at the time you were introducing it, it was very innovative, very different.
People thought I was crazy.
Right.
They're like, what are you even talking about? I go to venture capital firms. They're like, what are you talking about? They thought, this guy's a good salesman, but what is he talking about? And it has traction, but I'll tell you what's fascinating to me. For all the talk about it, so few people have created tangible tools that help them understand their clients better. And one of the first things I did is say, how do I take this idea and commercialize it, create an actual system? We created Money Mind because very early on, I'd have conversations with people like Dan Ariely and Kahneman, who I happened to strike a relationship with, very fortunately. And I'd say, look, I need to understand how I do something. And I had this idea. Money only does three things. It helps you to avoid pain and the things that cause you pain. Mostly avoid the things you're afraid of. Number two, it helps you to enjoy life. It doesn't give you happiness, but it helps you to do the things that make you happy. And lastly, it helps you take care of your responsibilities, the things you care about, the causes and people you love. And we all have a bias towards tilting to one of those three. But in order to have a fulfilled life, which is ultimately what you want, and Daniel Kahneman really nailed on this, you're not here to be happy. We sacrifice our happiness every day, and the happiness is a feeling. You can get happy by having a nice old-fashioned while you're watching the sunset with somebody you love. That's happy. But it doesn't last. Fulfillment lasts. And we sacrifice every day for meaning and fulfillment and sacrifice our happiness. We go to work and do things we don't want to do to accomplish a better version of our lives and of ourselves. And so the idea that I had was, if money only does these three things, and we need all three, and we're naturally predisposed to overstacking one side. Like for me, growing up the way I did with very little, I grew up wanting to fill the security basket. I wanted to avoid pain. I was driven by fear. And so we built the 7-question questionnaire that had nothing to do with money. Ask questions like, when you drive your new car off the parking lot and you're leaving, what are you thinking? Did I get the best deal possible? oh, I can't wait to share this car with my family, or, oh, I love the new car smell. And you'd answer these questions in what appeared to be unrelated to money, but it would tell us which of these three buckets you prioritized. And why did that matter? Because in stressful moments, that's where you're going to go first. And when you're in a marriage or in a relationship with someone else who has a different set of priorities, guess what's going to happen? Flare up, because you have a different set of values. And we used that initially, that 7-question fun game. It looked like a game, but it gave our advisors an immense edge, because it allowed our advisors to be able to say to clients, listen, I know you're biased. We knew if they were fear-focused, they would be concentrating on fees and performance and outcomes at the cost of happiness and fulfillment. And so we would use that to provide better advice and shorten the trust cycle. So it had commercial application too, but it allowed our advisors to be better advisors. Because what is the core? People will not listen to advice if they are not understood. As a father of 3 daughters, I can tell you that is a truth. That if you want people to listen to you, it has to start with them feeling understood. And if you don't know who they are, many of them don't even know who they are, right? If you don't know who you are, you don't know why you make the bad choices that you make. So our job is to give you awareness of your biases, because we all have them, and the stories you tell yourself, which might not be true, that are limiting beliefs, limiting your success in living your ultimate life. And doing it in a non-cagey, non-West Coast way, which is why we never use the word values. We use priorities, because I wanted to not be preachy. I didn't want to be West Coast, mumble jumble. So what we did is we just created a system. It was very technical, very real. And then when people did it, there was no dispute. They were like, yeah, this is me. And the spouse, most importantly, the non-financial spouse, would be immensely interested in the conversation, because it wasn't about beta or standard deviation or alpha. It was about, this is how you think and feel, and we want to help you to get out of your own way.
So I'm taking notes here, because you're dropping so many gems here. I gotta make notes on where to follow up. But I want to start with one thing that I believe so deeply that you and United Capital truly pioneered. I believe in what's called embedded behavioral finance. And it's something that we're doing at Orion now, and that you were really the one that pioneered. Traditionally, advisors who were focused on behavioral finance, if they believed in it at all, they believed in it in sort of an educational context. They would learn about it. They would try and teach their clients about it. That is a very well-meaning approach, but we know a couple of things. We know, first of all, that we forget about 90% of what we learn within 72 hours if it is not reinforced and applied and personalized. So teaching our clients about their biases, about the things they should and shouldn't doing, is weak medicine if we're not embedding it, if we're not baking it in to the way that we go into the world. The other thing we know is that clients aren't asking for this stuff, right? Morningstar's done great studies that say, hey, what are you looking for from an advisor? And almost no one is saying, I want someone who can teach me about my emotions and my biases. And yet we know that when they get it, they love it. So they don't know that they need it, but we know that it's important and we know that they love it. I feel like building tools and building technology is the way to go. And yet so few people are doing this. So many people are still relying on sort of the old-fashioned educational approach. Why do you think that is?
Because our industry has no imagination. Look, everyone gets training. It's the same training. It's about technical skills. And we're not talking about technical skills here. What typically most of the people in our industry do, I can tell you as someone who's building lighthouse brands, it's what we do now. And the 3 things we start with. Number 1, what is the promise you're making to the marketplace? And what you'll notice is everyone's making the same promise. It's a wishy-washy, we're here to do wealth management for you. And it's some variation of, we've got a long history, we're really trustworthy, and we know what we're doing. We have some form of expertise. There's literally no imagination at all. And you can see that when you just Google wealth management in your neighborhood. So everyone, and this is true of any industry, 99.9% of people just look around and say, what's everyone else doing? And let me do it in a prettier way or a cheaper way. That's basically it. So there's no one saying, that's not what I want to do. My inspiration was never the wealth industry. It was retail. I'd look at what Apple was doing and Tesla's doing and say, what are they doing? Because they are reimagining the way consumers engage in their lives. And I'll give you a great example. Tell me, when you go to Apple, do they ever hold your phone and do it for you? No. When you go and plan a trip now, do you ever use a travel agent and have them book the whole thing? Almost certainly not. I am sure, even if you have a travel agent, you're going to look at the hotel, you're going to look at the rooms, you're going to look at the menu, you're going to look at the pool, you're going to watch a video of the beach that's by it, and you're going to decide, because people trust Google more than they trust their own parents. That's the truth. And yet most advisors have not adapted their own model to adapt for the fact that almost every consumer today is a part of designing their journey. They still are using the old model of, I'll tell you what's good for you. And yet almost every consumer and every interaction they have is participating in designing their journey. So it starts with just a fundamental lack of comprehension that consumers are not the same. Even your old consumers expect to have a seat at the table. And 99% of advisors still operate under the old model. I'll tell you what you need. They are not collaborative enough in the voyage. So that's the first, lack of imagination. They just copy what everyone else is doing. So the promise that you're making and how you live up to that promise. Number two, advisors are so busy, they don't have time to build their own things. And most of the technology stacks are not from advisors. So they're most built by technology people, which simply are looking to traffic information back and forth. They don't actually live in that final mile between the technology and the consumer. I had an incredibly brilliant board member called Arthur Rubenstein, who was the president of Starbucks and head of client experience at Starbucks. And he was on my board for 10 years. And he always said to me, 100% of our profits for any service company is in the interaction between the consumer and the final product. So it's not the coffee. It's everything that happens from the moment the person says, I want coffee, to the minute they put that cup in their mouth. All your profits are driven by that, the interaction, how they consume your product. And no advisor, not none, but almost none, actually think about the client voyage to consuming the product. They all just do the same thing. I'm going to do a financial plan. I'm going to do an investment strategy. It's going to look like everyone else. And they don't think about all of the decision-making and the consumer and how do you interact. And do you have your own app? Like to reinforce, we had their biases toward money right at the top of their app. So they remembered, this is how I think about things. I am driven by fear. That means that my decisions will always be to overstack for protection and sacrifice the possibilities in other ways, which is not good for me. And then the third, actually creating the tools is hard because you've got to make mistakes. Like when we first did Money Mind, it wasn't perfect and it got better. When we then did Honest Conversations, which was a prioritization exercise using the same framework, but with actual priorities that people would pick and boil down all of their financial goals to 15 things, not 600, 15. We started with 180. We got down to 15. And thousands of people use that to help prioritize what mattered in their lives. And yet, how often have we sat down with people and say, why do you do what you do? Because it isn't to retire at 65. That is a goal. It is not a motivation. And I think we as an industry, the disservice is they don't have systems to get to the primary driving motivations that people have. Like I tell you, the number one reason people worked was to spend time with people they care about. That was the number one across thousands of clients. That was the number one. And what did that mean? It meant that if you didn't know that they were working to spend time with people they care about, then you're focusing on them retiring at 58, but they're not spending time with their kids while they're growing up, or with their parents, or with their loved ones. In order to get to that goal of 58, you're making the same mistake that all those entrepreneurs I met, because the gap is not goals articulation, it's motivation. Why? What gives you meaning? And usually It's the thing that's underneath the thing that you think you're answering. And the answer to that is to ask why more frequently. When they say to you, I want to retire at 58, why? Well, I want to spend time with my family. I want to have free time. What is it about that really motivates you? Well, I just don't want to work for the man. Getting to the reason why, what in their lives has led to that, and what really is driving. Because honestly, you'll find that most of the time they just want to get out. Everyone's different, but one of them might be, I just want to get out so I can be free to do whatever I want. And then what happens? I don't know. Okay, well, let's talk about that, because you're going to get there and then you're going to be empty. And by the way, if you get there 2 years later, but you've actually spent time watching your kids' soccer matches and being there for your anniversaries, isn't it worth it? Like, what about if we extend you for 3 more years, but you do it in the right way so work isn't so bad? These are the kinds of things most advisors never tap into because they're so busy answering goals questions when the goals could be wrong. What if your clients just have the wrong goals because they think what everyone else has told them, including our own industry, that this is all about retiring at this amount of money? When if you do it the wrong way, your whole life is not returnable. Like, it is not money. It's about life and your time on this earth. And are you maximizing every moment? But it's hard to do something that isn't being done. It's hard to articulate the words. Obviously, I've been doing this for decades, so I can put into words and know the technology I need. But it's a hard space because no one does it a lot, right? I always thought after the success of United Capital, everyone would copy it. What did they copy? The acquisition model, the singular platform. They didn't copy the thing that made us magic, which was the experience that clients had when they came to us. That, again, the great brand has 4 things. That has a promise that can be kept consistently. A brand is nothing more than a promise made, consistently delivered. So it needs a promise that means something. You need the people delivering on it. You need a platform that executes on it. But the 4th and most important to be a real lighthouse brand is passion. And passion happens when you tap into something that is true and important. And that doesn't mean that doing financial planning is not important, but it is a vehicle. It is not the thing. Just like money is a vehicle, is the fuel. It's not the thing. Where you're going and why you're going there is far more important. And Money Guide Pro doesn't do that, right? It doesn't actually, it's very good articulating goals, and I'm not attacking anything here. It's really good at creating the GPS. But for the driver, why do you want to go there? And is that really where you want to go? And when you get there, is it what you really want to have? Those are uncomfortable. Advisors are more technical. They don't love the emotional aspect of that. And yet it is where all of the magic happens.
I just want to reinforce a couple of the things you've said. The first thing was the collaborative piece. When we look at the research around why people fail to present to the office of a financial advisor, the number one reason why is a fear of judgment and a fear of this sort of power differential. And I think a lot of times advisors who feel, maybe a young advisor or an advisor who is skeptical of the value they add, may even magnify this power differential, use jargon, use big words, be very technical because they want to prove their worth and they want to prove their value. What clients are looking for and what helps them deliver behaviorally is the collaborative approach. And then I love what you said about just pulling up short of the why. A lot of times we take things at face value, right? We get the goals, that ticks a box, we're on to the next thing. But we pull up short of that rocket fuel, that motivation, that why, and we're leaving such valuable data on the table. So Joe, if the most common promises are a prettier or a cheaper something, what's the right promise? What's a compelling promise that a wealth management firm could be making?
Look, to me, the promise that everybody wants in this world, everyone wants 2 things. They want to narrow the gap between who they are and who they want to be. Like all humans want to be the best version of themselves. The second thing they want is someone to love. We can't fix the second one. But the first one, money and how you make it, since that is 60%, 70% of our waking hours, helping people understand what version of themselves is showing up. and what limiting beliefs they have around their financial and work choices are controlling and limiting them from living their best life is a hugely important aspect. I think the future of wealth management is more about time allocation and energy allocation than about money allocation. I just strongly believe, and this is not being a therapist, but how you make your money, how you make those choices about money and why you're making them is much more important than whether you're allocated 60-40. And by the way, much harder for an AI machine to do. The functions that we have historically done, from financial planning to AI, to asset allocation, to security selection, AI is going to virtualize 90% of that work and do it as well, if not better than us. And you have examples of that in medical, where I don't know if you've done any of these body scans lately, but it catches 2 to 3 times as much as humans do. Trained surgeons who look at a scan of your body, pre-identifies cancerous breakouts way before a human does, because AI is able to look at the breakdown of body mass and see where there's weird anomalies in ways that humans cannot. That same thing will be true in planning. There'll be so many iterations being run that you cannot envision or imagine, with answers that here are the things this client is not thinking about, and you're going to need to be in the translation business. You're going to need to be in the asking the right questions business. And it's going to force advisors to go up the value chain to something that is deeper and more impactful. And it's going to be about managing time and energy and people's biases so that they don't get in their own way. It's going to be a little uncomfortable for some of the people who love sitting, analyzing portfolios, because that is being commoditized by AI as we speak. I mean, I don't know if you go to ChatGPT, I'm always just blown away with what I can solve right now by just going to ChatGPT and asking a question. Everything from a logo to what the top stocks to buy if you're a certain kind of person. Like, it is remarkable. And I can't believe, even though it's only I think it's $13 a month, I cannot believe how few human beings in our industry have even spent 5 minutes on any of it. I literally, it is incomprehensible to me, and yet it literally takes 2 minutes to download the app and $13 to just see in real time what's available right now. Honestly, I'm speechless, and it's much harder to do behavioral economics. If you can't even do that, to just see what's coming down the pike, heaven help you. So I find it just amazing how we just get, all humans, we get into a routine. We're trapped by the success paradox. I've been this successful by doing it this way, therefore I shouldn't mess with it or I'm going to be unsuccessful, rather than answering the more interesting question, which is, why am I not twice as successful? And what limiting beliefs do I have that are constraining me from being twice as successful? What happens, and the success paradox is basically, once you get to a certain level of success, you stop doing the change and the growth that's required to get to the next level, so you're just stuck. And then you'll continue doing that for 20 years, and your client's loyal, and they're not going anywhere, and it's all fine. But if you're not growing, it's because you're not growing. You're not changing. You're not evolving because you want to keep it where it's at. And the great tech companies, the great innovative firms, the exponential thinkers are always saying, what is it we're doing that's constraining our ability to be more successful? What is it we're doing with our clients that is constraining us from really moving the needle? Why are we, add a decimal point, go 10x. What would need to be true if you're going to be 10x what you are today? What would need to be different? And most humans don't think that way. I think, because I'm a lunatic, I always think that way. But it requires you thinking that you're wrong. And that is something most humans hate to admit. Like, hey, I've been wrong this time. I thought it was this, but it's not. And being wrong, being fallible, being vulnerable, I don't know how you grow without it. So as a human, I don't care how people say to me, why are you doing this or that? And I always say, because I'm growing and I'm learning. I'm doing things I've never done. I've never been a minority investor. I've always been the king of the show, and I'm not doing that now. I want to do it differently. I don't want to be the guy on the firing line. I don't want to be alone in the pit. I want to see if I can do it just advising the next great champions. I want to back the next gladiator. I don't want to be the next gladiator. And can I do it? I don't know, but I'm going to learn, and that's worth something. And it's a simple question. Why are you on this planet? Are you here to get security and safety, or are you here to grow and evolve? And I tend to have a very Buddhist view of this. It's all fickle. It's all meaningless. So just give everything you got and try to keep growing and anticipating and enjoying, and just keep challenging yourself. Because if you keep growing, I'm a huge believer in this anti-fragile theory that humans are built to be stressed under choice. It's very different if you have a choice or not. And I believe that as a human, like you're on this planet to grow. And that means questioning what you're doing and asking yourself, what's holding me back? What's holding the team back? But I find typically most people get to my age, I'm 57, and they've had a good life. And almost all of them say the same thing to me. What the hell are you doing? Like, if I'm where you are, I wouldn't be doing anything. I'm like, yeah, and you'd be dead 10 years later, but that's not me. I might be dead 10 years later, but I will hopefully be passionate and enjoying and questioning things and seeing how I can grow and how I can give. So again, I think some people are wired differently, but I just strongly believe in challenging all of your opinions and all your beliefs, because you'll just find that they're not usually true.
Yeah. One phrase that I'm going to be using again is that the future of wealth management is about time and energy allocation and not asset allocation. I think that is just something the advisors that listen to this can run with. The other thing is your comments have driven home something that I believe, which is we're fighting the wrong battle, I think, as an industry with respect to AI. Yesterday, I was talking to AI in English, literally speaking, just speaking to it, asking advice. Then I speak a second language. I switched to the second language. It did that fine. I mean, we are still fighting the battle that AI can never do the things that we can do. We're still trying to make this point. And I think we need to be making the point that you just made, which is AI is going to do the things for us that we don't do the best to free us up to be as human as possible. It's going to free us up to do what we do best, which is the human side of advice.
And look, here's the truth. Our industry has been very male-dominated, and I can never remember if it's the left side or the right side of the brain, but very technically. And again, there are plenty of, I'm not being sexist here, just the traditional view that this is about X's and O's. Mm-hmm. And as we shift more and more to what I consider, and many consider, the female, more holistic view of life. Mm-hmm. And one analogy was used when I was at Cal was men think in bento boxes, women think like bowls of spaghetti. They're both great, but they're very different. And I know for me as a dad of 3 daughters and my wife, if she's mad at me about something, it's going to cloud other things too. I'm very comfortable putting things in a box, and that's not healthy either. Like they all come with limitations. But it's true that things are jumbling together. People, and that certainly was accelerated by COVID when we started working from home, like the clean barriers that we have between choices are starting to blur together. And that's true in work-home life. It's true in almost every aspect. That lines are blurring. That's true of retirement. It's not like it's a hard stop for most people. Most people now, they might retire and go back to school. They might retire and join a board. Like there's this hybrid combination of life that's more fluid and requires a much more nuanced approach. It requires tapping into emotions and feelings, which is an area that some people are just really uncomfortable getting into. And if you're going to do it, you've got to do it for yourself, because you cannot be a good advisor of emotional allocation of time and energy if you're not very thoughtful about your own allocation of time and energy. So, when I tell people to start, if you're an advisor looking to really go where the industry is going, I'd say start by reading the book Awareness by Anthony DeMello as a concrete, start thinking differently about the world. Read a book like The Untethered Soul by Michael Singer. Read about books that elevate your soul, help you identify why you exist, and that thinking will tap into your delivery and how you see and think of people. And not with judgment, but with an appraisal and appreciation that we all bring something special, and we want to bring people to living as honestly to that thing that they're here on this earth to do, and that's not in words. It's not easy to find, but it starts with you first understanding, why am I here? What do I do? what is it that I am uniquely able to bring to this world, and tap into that and understand that, and then you're going to be able to interact with other souls in a better way. I know we're going to a very Zen-ish place here, but the reality is this is always just an exchange of energy. You know, my focused energy and what I know about wealth and what you know about behavioral economics, like you're just bringing the universe what you feel you are best suited to bring to this universe. But as people enter the second phase of their life, it becomes more important that you figure out what your soul wants and make sure that you're giving it and getting it what you need from the universe too. And that is often very nuanced, but it starts with understanding yourself. So if you're going to be a great advisor in the future, I think you need to start, as Socrates said, by knowing yourself. Like spending time actually evaluating what about the job you're doing is it that you really love? Because you'll find most human advisors, they love impacting people's lives. They're not so in love with reporting standard deviation.
Yeah. So I'm deeply on board with this, Joe. I told you I was going to send you a copy of my book after this. The name of the book is The Soul of Wealth. So you just said the word soul, I think 7 different times. I'm deeply on board with this message. If you are one of these advisors who is a bento box mentality, to use your analogy, and you know, I'm hearing all the things you're saying. McKinsey, a year or two back, came out with their Wealth Management 2030 white paper that said, look, the advisor of the future is going to be a life coach, effectively.
Yes.
A life coach who happens to help you with a financial plan and not vice versa. If you're of this bento box mentality, or you got into the business because you love picking stocks or crunching numbers, is it time for the old guard to roll off? Do they re-educate? Do they learn new skills? And what do we do to attract that next generation of talent that's going to look very different than the one we've had before?
Oh, here's the good news. It's happened in our industry before. And I'll give you a good example. At United Capital, when we built the first business, it was all investment-centric, right? And most of the industry was all investment-centric. It then became much more planning-centric, and we started tapping into people's lives. I think United Capital leapfrogged and went straight to the emotional side of things. But we would acquire firms that came from an investment heritage. They would be very uncomfortable doing financial planning. And we would try to train them how to get to that side of the fence, but they had spent 30 years doing a certain story and doing a certain way, and it didn't work for us to try to get them into financial planning. It was just the language in a world they weren't comfortable with. The way we change that is to give them a planner on their team who was an extension of their team, and then they only had to be comfortable with the idea of the importance of planning. They didn't have to learn the language of planning. The same is true about this. You're much better having somebody like our team at Berkeley. They have a life coach on team. So the advisors who know the importance and see that their clients have a client who's dissatisfied or thinking about retiring, but isn't sure how to articulate why they're nervous about retiring, having someone on the team who can come in and say, we're going to help you articulate why you're retiring and what's good for you in retirement, what you'll need to be happy in retirement. Again, rather than having the expertise on the team, it's rather that they learn the importance of knowing that. And some of them will want to learn how to do it, and some will just need to have somebody on the team who can be an extension of the team. I see everyone rushing to do tax prep and rushing to do legal estate planning and adding their service offering, which again is fine. But if this is going to be about allocating time and energy, then we better spend some time having somebody on the team who actually helps you process these kinds of ideas without going into therapy. And they don't even need to be on the team, but having a relationship with somebody you can point to say, here's our expert desk to help you with this particular question. I'll give you another example. The number one burning issue for Gen Xers today, the number one, is dealing with aging parents. It is fraught with emotional baggage. I'm dealing with that with my own wife, whose my mother-in-law, her mom, is not where she used to be mentally and rapidly atrophying. And it's awful. It's awful because my wife has now gone from being a daughter to being a mom. And compound that with the financial responsibilities. Now, I'm in a fortunate place, but many people are not in the same place, where they've got kids who've left college and they have to support because it's too expensive for them to live on, which they're expecting. What they weren't expecting was the mom and the dad who didn't save enough, or did but don't know how to control things, and managing fraud and all of the things they have to do, or the drunken nephew who's an alcoholic, who they also, so there's all these off-balance sheet liabilities that no one's tackled. And honestly, one of the first things you could do is just start by having a genogram of the client. Here's your family. Who would you be responsible for if something went south? Who's in charge? Because here's what we know: the people with money will ultimately be the beast of burden. Mm-hmm. And most advisors are not sitting there identifying these blind spots. And there's something anyone can do that's tangible and real. Just start by identifying potential liabilities that the clients are not thinking about, which are usually family related. Where does the buck stop when things go sideways with all these people in the family tree? And it's usually your client who has the money. That's the truth.
Right.
So it's interesting how many areas you could go to that are hugely impactful for clients, that are differentiated and no one else is talking about.
Yeah, I love that. There is a lot of monkey see, monkey do in our industry, and we've had a strong message to blaze new trails. So before we run out of time, I want to give you an opportunity to talk about your new venture. I want to give you time to talk about Rise Growth Partners. Specifically, you're looking to infuse capital and strategic help to RIAs in sort of the mid-size space.
Yeah, $5 to $10 billion. Yeah,
$5 to $10 billion. When you look at the kind of RIAs you'd want to invest in versus those that you would pass on, what are sort of the defining differences?
There's three, very simple. It's very easy. Look, I have three guiding principles. They guide the principles of Rise. Number one, we're good people. Number two, what we do matters. And number three, we love what we do. And that can only be true if you work with people you really like. So first and foremost is the leadership and what they're doing and why they exist. We don't care how well you've articulated. We care that you're good people wanting to make a good impact. And if there isn't that, nothing else matters. Because at the end of the day, I don't have to be doing this. I want to be proud of my associations, and we need to have people we can believe in. And so that's number one. What's your intent? What's your purpose? And if it's about making as much money as possible, you're not for us. Like, we want to be associated with people that give us pride to wake up every day, because you're going to get our hearts and souls. So that's number one. Number two is, do you have a platform and a delivery mechanism that can be scaled? And what's involved in taking it to the next level? Getting to 30 billion is very different than getting to 5 or 10. And a lot of advisors run these as lifestyle businesses where they're at the top of the bottle. They're the bottleneck. They don't invest in people. They're milking all the cash flow. They have not thought about, and I don't mind if they haven't done it, but if they're not willing to explore what is a better way to serve our clients, to deliver scale and efficiency, we have a problem. And third is, what's your growth track? Organic, inorganic, and marketing positioning. And are you willing to think exponentially? Because at the end of the day, we want firms that we can build into billion-dollar brands. And you need those three things. You need to have the right people and leadership. You need to have the right platform for clients, advisors, and for back office. And lastly, you need the growth strategies to execute on it. I can tell you the work we're doing at Berkeley in the branding front, I think they are almost speechless with the kind of work we're doing to reimagine and take their core offering and make it sing. Because at the end of the day, it's how you tell your story. It's not just the story, it's how do you tell the story, because it's what moves people. And I'm passionate about getting the essence of people and putting it into words that it's exciting and creates passion. So we are minority investors. Unlike a lot of the other investors, we don't want to tell you what to do, but we do want to be expert guides. And we have a whole team of people who've built deca-billion-dollar firms at marketing. We've got the former CMO of Focus and the Colony Group, head of technologies, the head of third-party technologies at Schwab. So we have a whole team of people who are, for free, part of our investment. What it requires is we have partners who actually want to think big. And that's not everyone, because a lot of people are at 5-8 billion. They're kings of their universe and they're very happy. Yeah. And the reality is they're just fine. I just think that if you're going to be successful in what we are now, which is a super competitive land grab business, we are no longer a growth industry. There are all the advice you could ever need, which means we're in a consolidated industry. And if it's consolidating, you need a great brand, which is why we focus so much on brand. Like building a lighthouse brand is how you win. It's how you get pricing. It's how you grow organically. And at the end of the day, all of these sub-acquisitions that are happening are meaningless if you don't have organic growth. So our job is to build beautiful brands that we're really proud of associating with, that do great work for consumers, and that we love the people we work with. So, again, I'm doing what I love and helping build the next great generation of entrepreneurs because I love this industry. I know we can keep doing better. And as someone who worked at Goldman with brilliant people, the independent RI can do things that the large banks cannot. Their regulatory environment limits them from doing a bunch of things that as independent RIs you can do.
So last question before I let you point folks to where they can find you.
Yeah.
As a psychologist, right, everyone's going to put their best foot forward in this vetting process. You're trying to get to that top of your value stack, which is work with good people. At a time when everyone's going to be putting their best foot forward, how practically do you vet that and sort the wheat from the chaff there?
I tell you, there's nothing better than the evidence of how they run their business. If the firm has the leader's name on the top and he has 100% of the stock, I don't care how much he tells me about how much he loves his people. Mm-hmm. Behavior matters. And I'm not going to be able to change if you're 58 years old and you've never given one shred of stock to anyone on your team. I know what I'm getting. And I'm not interested in somebody. Look, I built 2 pretty substantial businesses. I had 13% of each. And our team, who did not put their money at risk, ended up doing extremely, extremely well as a consequence. And maybe that's just my jaundiced view. I like people who like to give. And I like people who give first and get theirs as a consequence of their giving. So to me, it's very simple. Actions reflect that. How you treat people, not just in words, but in actions. Do you have leaders that actually are empowered to make choices? Are you vulnerable to being wrong? And again, I have 3 very simple ones. Knower versus grower. If you know it all and aren't thinking about growing, you're not for me. Giver versus taker. If you think first about how I can contribute and then get your piece, fine. If it's the other way around, no, thank you very much. And then are you running a meritocracy or an aristocracy? If you are running it like the Lord Almighty, you're not for me, because the reality is you don't have all the answers. And if you do, great, you don't need us. So those are the 3 very simple filters I have. I used to have it, frankly, when we would acquire advisors too. If you didn't have those 3, I'm a giver, I'm a learner and grower, and I believe in merit-based decision-making, then you weren't for us. And I've just applied that. I found that the people I love in this world are humble, they want to give, and they really believe in you earn it, you get it, not the other way around.
Humble, charitable, merit-based, a great way to look for talent. Joe, this has been incredible. I used to do pre-employment assessments of sort of top-level banking executives, and everyone would always tell me how passionate they were. And I would say, wonderful, what is the evidence of your passion? Because passion leaves a trace. Passion has behavior that accompanies it. And 9 times out of 10, they couldn't point to anything. Talk is cheap. Behavior matters. You've given us incredible wisdom today. If people want to learn more about what you're up to, where to find you, where's the best place?
The easiest is LinkedIn. I am on Twitter at Duran Money, but I have to say, honestly, I just don't interact with the platform very much anymore. But I don't know what happened, but all of a sudden I have just nothing but garbage in my stream. But I'm at Duran Money or Joe Duran on LinkedIn. And you can, of course, go to Joe at Rise Growth, and you can go to risegrowth.com anytime and learn about what we're doing. But again, I hope this was helpful to anyone that wants more information. I also write for CityWire consistently. I'm a contributor there, and also Investment News. So you can certainly, I post those on LinkedIn anytime you want to read any of that.
All right, folks, an action-packed 45 minutes from an industry legend. Thank you, Joe. So great.
Thank you for having me.
Thanks for tuning in to Standard Deviations. If you can't wait till next week for more behavioral finance insights, visit www.orion.com. All opinions expressed by Dr. Daniel Crosby and podcast guests are solely their own opinions and do not reflect the opinion of or endorsement by Orion and its affiliates, subsidiaries, and employees. This podcast is for informational purposes only and should not be relied upon as a basis for legal, tax, and investment decisions. The opinions are based upon information the participants consider reliable.